Hey, happy Saturday, everybody. We are here. We're up. We're having fun. We're excited. We have an amazing panel. Actually, we were just talking to Representative Terry about how they are making more of a mess about our financial institutions down in D.C. And I wanted to point out that Governor Huckabee on his show today is doing a special segment called Dancing with the Czars on the news channel. It's going to be hysterical.
And you know who else is there? Tanya Tucker. So you can tune in there.
That's very true. She's singing live in studio.
But live on the phone right now is George calling from California. George, go ahead, ask your question. What do you want to know?
Thank you for taking my call. I'd like you to give me the pros and cons of investing in the Treasury, inflation-adjusted Treasury bonds known as TIPS.
Right.
And also, please comment on, would a person be better off buying individual bonds or a fund that invests in bonds? Thank you very much.
Okay.
You're up very early thinking about this stuff in California. I want to throw it out to Joe.
Actually, go to Robert. Robert, I want to know what you think about TIPS first.
I'd rather defer to the other guys because that's really not my specialty. I personally don't care for bonds because of the amount of money the Treasury is printing right now. So I kind of stay away from them.
But you know what? If you like real estate and you're worried about inflation, that is absolutely the best thing to own, really, because the value of your house inflates, your income inflates, and if you have a fixed-rate mortgage, that's one inflation-protected investment that nobody thinks about. Joe Clark, what do you think?
I own TIPS. It's the exchange-traded fund for the Treasury-linked bonds. I think it's a good play right now. I would go right along with the fact that the Treasury is printing a lot of money, and you've got to be careful with credit risk. But right now, the market says that's not an issue. One of the nice things about exchange-traded funds are the liquidity that you can get. So again, if you want to buy them, TIPS. In terms of buying individual bonds or buying a fund, I am not a big fan of buying a bond mutual fund. Just because of the issues that are out there, the lack of liquidity that's inside of the bond market. I follow Bill Gross and everything that he does, which is the largest gorilla of bond managers in the world. But again, I like the ETFs. If you like corporate bonds, it's LQD. If you like junk bonds, it's HYG.
But we should clarify, you're not saying buy individual bonds. You're saying buy an exchange-traded fund, which is just a tradable mutual fund versus a regular mutual fund. Because individual bonds, I think we saw, if you're talking about corporates, we saw with GM what can happen to you.
Absolutely.
You lose the income and it blows up in your face and you lose your principal.
So it's not terrible to have a manager watching over your shoulder. The beauty of the ETF is you could trade it like a stock. Whereas a mutual fund, you pretty much have to wait till close at the end of the day before you can move in and out of it. That's the upshot to it. Downside, though, a lot of people shorten these things these days.
Yeah, you just have to be careful with the fund. It doesn't have a predetermined maturity date, so there's no absolute guarantee that on such and such a date you're going to get your money back. Where if you do buy the individual TIPS bond, you know that on that date you will get everything back. And that's why a lot of people buy those, and you don't really get that in a fund or an ETF.
And Congressman, we didn't forget about you. We'll talk to you when we come back from the break. Saturday mornings are about you here on the Fox Business Network, the only business network answering your questions in true HD.
Welcome back to the Fox Business Network. I'm Tracy Burns along with Dagen McDowell. We're taking your questions about your money live, so email us, send anything that's on your mind in, because we got people here to answer it.
We have some superstars here. Let's reintroduce them quickly. Congressman Lee Terry from Nebraska is here. Doug Flynn, a certified financial planner and founder of Flynn Zito Capital Management. Certified financial planner, Big Joe Clark with Financial Enhancement Group, and Robert Kiyosaki, the author of Conspiracy of the Rich, and of course, Rich Dad, Poor Dad. Call us 877-249-9626. The email, yourmoney@foxbusiness.com.
Representative, I wanted to throw it back to you. You know, this last block we were talking about inflation, our worries about it, concerns about it. Is there concern about it down in D.C.? And if so, were they doing anything to address it?
Well, absolutely, we're talking about the risk of inflation, and we think putting that much money, printing that much money, putting it into the economy, just from our basic college economics, tells us is inflationary. The issue is we don't know how much or when, so it's hard to do anything about it. We hear from the administration that they think it's going to be minimal and that they can control it. I pray that's true, but I'm just not confident in it.
Let's get to the phones real quick. Congressman, I know that Lee is on the phone from Wisconsin. Lee, can you hear us?
Yes, I can.
Lee, go ahead, ask your question. What do you want to know?
I was wondering what protection there is for senior citizens retired who are being forced into foreclosure by extremely high property taxes.
High property taxes. Big Joe Clark, how do you fight them?
It is a tough ticket to fight, and it's just going to get worse. You know, I'll get it out eventually. Municipalities are broke. We've already got 15 states that have run out of unemployment benefits that are having to tap the government. You know, the best thing that you can do is try to minimize, in my mind, and that goes against Robert, but in my mind, make sure that the properties that you do own are your residence and try to be careful on other properties. They will do their best, my friend, to try to keep those taxes so that you can stay in your houses. But it is an issue. They do have to rise. Municipalities can't print cash.
Robert, to that point, because you advocate buying properties and renting them out, how have people in recent years who followed your advice done buying properties and renting them out?
I'll say it again. There's a difference between cash flow and capital gains. And as long as you have cash flow, your tenants always cover your property tax. But the key to real estate is jobs. And so what this gentleman's really talking about here is that if we keep losing more jobs, we're going to have higher property taxes, unfortunately, and then the real estate industry collapses under that. This is what he's talking about is a very serious problem. There was a book written in 1995 called Bankruptcy, 1995, and it was about the coming high property tax problem. And this element is kind of early into the problem right now, but everybody should be aware of property taxes.
Robert,
it's going to kill us.
Right. There have to be people out there, though, who have read your books and followed your advice closely, who bought properties you know, at inflated prices and who thought they were going to have great cash flow from renting them. And then the housing market, the bottom falls out, rents tumble as home prices tumble, and they're left underwater and without the cash flow to even cover the mortgage.
Yes, that is unfortunate. But what I've always said to people is you need to get some financial education. And the congressman, I applaud you. If I lived in Nebraska, I'd vote for you. I think the big problem is we don't have any financial education. So it's not real estate that makes you rich. It's not gold. It's not silver. It's not stocks or bonds. It's not businesses. It's financial intelligence. And as you can tell, we don't have much financial intelligence at the bottom of the food chain, at the top also. I mean, we're so mismanaged right now because we lack any sound financial judgment. And we need to have financial education in our schools. And that's really what I stand for. I'm an advocate of financial education. And the question is, why don't we have it? That's the biggest question of all. This crisis is a crisis of financial ignorance. That's the biggest problem.
He brings up a good point about when a client will say, should I consider this property? They don't look at it independently as if it was any other investment into anything else. They don't look at the cash flow. They don't look at all of those details. And these are people that seemingly have money and know what they're doing. So the point is, it needs to be treated like any other investment. And people had gotten way in over their head without those solid, independent thoughts of, can this investment stand on its own? Can it provide cash flow? People are hoping just for the capital appreciation side, and that's not there. And so you do need to do a little bit more digging and look at everything independently, not just go into one investment or the other because you think it's going to do well.